This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. Hey, welcome to the FlipNerd.com Expert Interview Show Top 10 Series, where we're sharing our top 10 shows from 2017. If you're looking for inspiration today, well, you found it in this FlipNerd.com 2017 Top 10 Award Show. In this episode, I talk with my good friend, Corey Peterson. Corey moved into real estate investing after being a used car salesman and just closed on a multifamily deal where he's netting about $4.7 million. Now, Corey is also a single-family wholesaler, but has seen the light on doing bigger deals that help him and his family build wealth and generational cash flow. This powerful episode helps us remember the incredible opportunities we have as real estate investors. So let's listen in to this top 10 winner for 2017. Corey, welcome to the show, my friend.
Hey, buddy. Welcome, man. I'm excited.
I'm excited too. It's funny because, the way this has evolved is this is show number 376. I've done a lot of shows now, but through the show and through masterminds and different events and things like that, I've built some strong personal relationships with some people, and you're at the top of the heap, my friend. You're top of the pile.
Hey, man, I'm honored, brother.
Yeah, I love hanging out with you. In fact, we're going to be hanging out together next week, so looking forward to that.
Yeah, man.
Yeah. Well, for those of you that haven't met Corey, I'm going to have him introduce himself here in just a second, but Corey was on the show. I don't even have the old show notes up, but it was a long time ago. It was probably at least 2 years ago, maybe longer than that. And and Corey is a lot of folks in real estate investing tend to think about like progression as an investor. A lot of people get started in single family, and some people ultimately move into kind of bigger deals, and that's exactly what Corey did. He's going to share a story with us today. In fact, he's got a new book that's about to get published here in just a few days we're going to talk about too, to kind of share his story and how you can do it too. But Corey is pumped right now. He's got me all jacked up because he just made almost $5 million on a deal, his first multifamily deal. And I know he's doing a little dance over there, but it's an exciting story. I mean, he's going to share with us today like how that happened. And not that multifamily is for everybody, or not that commercial stuff is for everybody, but he's going to share his story and how you can do those things too. But before I try to summarize this all in 1 minute, which I can't do anyway, let's just start off by just telling us about you and your background and kind of how you got started.
Yeah. Man, I grew up just a small country farm boy on a small town in West Plains, Missouri, and I didn't come from much, right? So I didn't have the golden ticket, and I've had to hustle. I started off as a restaurant manager and selling cars, and I wanted something more, and I was able to go to Hawaii. My mom had married a gentleman named Bruce. I call him Bruce Wayne. Okay, he's not Batman, but the guy was loaded, okay? And so we got to go to Hawaii, and he had a house right on the beach. And I remember going to this house. First time my wife was my girlfriend at the time, we looked at that thing. We were on the beach watching the sun come up. And I remember looking at Bruce, like, from afar and, like, thinking, man, what do you do? Because, like, he had the perfect life of time and money, and, like, he had no cares.
Yeah.
And he told me real estate.
Oh, wow.
And that was the defining moment. Like, I saw the immaculate perception of what that life would look like if done right.
Yeah.
And then I read Rich Dad Poor Dad, and it put me on the path.
Yeah. So at that point, you'd never done a deal, but at that point, you were selling cars then? Is that what you were doing?
Yeah, I was a used car salesman.
Yeah. Yeah. But as you know, I mean, truthfully, everybody that's successful in this business, for the most part, has a salesmanship background, right? I mean, it's critical, really, in all small business. And I'm not trying to. If somebody just heard me say that and they're like, "Well, I'm pretty successful and I don't have a sales background," I'm not saying that, but it's a good skill to have to be able
just the communications. I think
communications,
being able to communicate with people. Yeah, and so so then I went on a journey, and I started off as a wholesaler, and then I did a pretty good job. I started building a track record, and then I wanted to do like the bigger deals. I'm like, man, if I could just raise private money. and I learned how to raise OPM, other people's money.
Yeah.
And I got masterfully good at it. And I started raising millions and millions of dollars, and I was doing fix and flips. And there came a point in time where I started to kind of, if I looked at that perfect vision, I wasn't living it anymore. I had money, or at least I thought I did, because all I did was a check cutter. Like I'd buy properties and cut checks.
Right.
And I become a professional parts runner too. Right? I'd go to Lowe's, go to a job site, and like, oh gosh, we were missing this and this and this. So I'd run to Lowe's and come back, and I did that for all my properties, it felt like.
Yeah.
And I was just chasing my butt, dude.
Yeah.
And it was at that point, I actually was, in the world I would look super successful, Mike, but I felt like an absolute failure because I was working so hard and so much.
Right.
And I remember driving by an apartment complex. And so an apartment complex I've driven by many, many times, and I would say, I wish I could own an apartment complex. And that's all it ever was. It was just a wish. But on one of my low days where I missed my kid's soccer game on a Saturday, right? His game was at 3:00. And, I woke up that morning thinking, I've got to go look at these 5 homes, and I'll be in time to get back to the game. And I missed his game because I'm hustling real estate. And I felt like such a, failure, honestly, failure. And I'm driving by and I see that apartment complex. And that day I said, how can I own an apartment complex? And man, that changed everything for me. Like it got me super focused on, well, I don't know. How do I figure out? So I went and found a really good mentor that taught me the business. And right then very clear for me is that I remembered looking back at Bruce in that Hawaii, the perfect life of time and money.
Yeah.
And then, Robert always talked about cash flow. He never talked about fix and flip and and wholesale and stuff like that. And I felt like I'd become a trader with a D, but it felt like a T.
Yeah.
So I was a trader to the craft in a way that I really wanted to be a real estate investor. And once I got into the apartment life, I knew that was exactly the route for me, and that it would, if I focused on cash flow, my life could get really good.
That's awesome. And we, I coach and mentor folks, and that's one of the things that we talk about all the time is it's early on, it's hard to not be doing everything yourself because you can't afford to have other people. You can't afford to have a lot of overhead yet. But the truth is probably most real estate investors, unfortunately, never get beyond that. They end up basically not really being entrepreneurs or business owners. They're self-employed, right?
Yeah.
And some of those people might do really well. They might make a lot of money, but like you said, you're kind of a slave to the clock. You're doing everything yourself, and you just can't get away from it. I
didn't have enough systems, right? I didn't know how to build systems. I build systems now, but
right.
I'm a lot older and wiser. Yeah. But I didn't do that when I first started out, and I just was frustrated. And also, it was also in my market, it was getting harder and harder to find deals.
Yeah.
See, I'd raised all this private money that was wanting to give me their money. And the problem, I was running into the problem of it was hard to find new deals. I was only doing REOs and short sales at the time. And when those started to run out, I didn't know how to market to find deals. You probably teach and like I do now today.
It's funny with raising, I know you're going to agree with this. It's, once you kind of learn how to raise money, or once you have a track record, you can easily raise generally more money than you need, right? Because it's somebody, I was at an event last week and somebody said, look, I've got $500,000 I'd like to lend to you. And I don't need the money. I was like, I know this sounds really weird, but I don't need the money. I'm not, that's not necessarily it's not my money that I'm borrowing, I'm borrowing it, right? But it's sometimes what happens is it's real easy to raise too much money, especially if you're doing single family houses. You might find somebody that's like, hey, I got $1 million to lend out. Well, the thing is those folks want to apply it right away, right?
Yeah.
So you can't say $1 million. That sounds great. Well, I only need $60,000 right now. So can you set all the rest of it in a savings account, just sitting there for me in case I need it? You've got to when you find people that want to lend you money, you've got to find a way to apply it, right? Otherwise, you're less interesting to them if it's just sitting on the sidelines.
You got to put the money to work, and so that's what I was having with all this capital available and not enough deals.
Right.
And I knew that capital was my ticket, and because by having access to that kind of money and that type of capital, you can put yourself in lots of deals. And so I always call this kind of like the Godfather, the Corleone method, right? I used to think that the money was in real estate, and it kind of is, right? But I truly, truly believe that the money, the real money, man, the money's in the money, okay? And because the money's always patient, it always gets the last look. It never makes rash decisions. The money negotiates out of strength. And because you have, and it doesn't have to be your money, okay? You just have to have access to it or to be able to place the money.
Yep.
And that's really how I got my first deal, is that I went into a group where there was a bunch of multifamily guys, and I stood up in the back of the room and I said, hey, listen, I got a crap ton of money. Is there any deals? And thankfully I did it on a Wednesday, right? It was a Wednesday morning or Wednesday afternoon. So the rest of the week I didn't pay for lunch or dinner.
Are you looking to change your life through real estate investing? If you're interested in either getting started or taking your business to the next level, please check out FlipNerd's private program at theinvestormachine.com. This is the most robust real estate investor coaching, networking, and mastermind on the planet and designed for your success. If you're ready to roll up your sleeves, ready to take personal responsibility for your own success, and ready to dive into a world-class instructional coaching program that provides you step-by-step instruction to help you achieve financial freedom, then you should apply today. Spaces are limited, and candidates are only considered after an application and interview process. Think you might be a fit? Learn more today at theinvestormachine.com.
So the rest of the week I didn't pay for lunch or dinner.
Yeah. So let's tell the story a little bit. I mean, I know you like we said, you just made $4.7 million on a deal, which is awesome. But you kind of transitioned from single family, so you kind of mentally made the decision, I need to own an apartment building. So tell us what happened next. Like, where did you go from there?
Well, so I had to go find the education on how to do it, right? So I went and sought out really good mentoringship education. My mentor was David Lindahl, okay?
Yep.
And
he's been on the show before.
Yeah, okay.
Yes.
So Dave actually wrote the foreword to my book.
Okay.
So really cool. But David, I flew all the way to Boston and met David, and I went into his coaching program, and I just became one of his best students. I truly took what he said, and I did what he did, and I didn't do what he didn't do. So and you know this, Mike, as well as a lot of people out there, is you don't have to reinvent the wheel here, not
right.
in real estate. It's already been done.
Yeah.
All you got to be able to do is be a master copier and put your own little flavor to it. That's all you got to do.
Right.
And so that's all I did, is that once I learned from him the whole concept of how to underwrite and make sure that we had good deals, right, and that financially they would work, then I needed to go find one. But I still had all this money, and I just found out, I went to one of David's events, and that's all I did was I stood in the back of the room and said, hey, I got a bunch of money. Is there any deals? Because I was ready to buy a deal right now, and I just wanted to see if I could.
Yep.
And it surprised me because I saw every deal in the room that week. And I was able to actually find a great deal from two guys that really, they had $100,000 hard in this deal. And they were going to lose it because they didn't have the rest of the money to close. And they needed to close in 30 days. Yeah. And I had the capital.
And that was this deal that you just made a bunch of money on? Okay.
Yeah. I bought it in 2011 for $3.2 million, and I raised $1.6 million of private money.
Okay.
And so I negotiated a 75% ownership of that deal from these two gentlemen. So they immediately gave me 75% of ownership of a deal that, and now I had to go, we wrote the contracts, but I still had to go look at I had to go vet the property.
Sure, yeah, of course.
Now, I spent a lot of time vetting the property. And, dude, so what I found out is the property had a bad reputation. There was a drug problem. There was a management problem because it was in receivership. It was an REO bank-owned property. And the management, they didn't give a rip. They didn't care. And, there was deferred maintenance. So all the units inside, like the interiors, just needed refreshing.
Yeah.
But the golden thing about it was that it was 3 miles from all the big box retail, the Lowe's, the Targets, all the nice stuff was 3 miles away.
Was this in your market or no?
No, I live in Phoenix, but this property was in South Carolina.
Okay.
Like a million miles away.
Yeah.
So I had to find a really good management company, and I had to understand my demographics and what I was doing. and I knew I had the money to do the deal. And so I validated the deal, and I knew the deal was great. And so I took on the risk. Now, the only thing I didn't do, if I could give like a little carve out, is I didn't underwrite my partners like I should have. That's a whole nother episode. We can do a know thy partner and know thy operating agreement.
Yeah.
I ended up buying both of those guys out, and I owned the property 100%.
Okay.
So, you want
to
talk
they got
about
25% of the deal, or who knows what your I mean, you know what your buyout was, but they got 25% of the deal for finding it, and because they were about to lose it, so they were willing to give up the majority stake of it.
Yeah, just so they could close it, so they could still have something.
Yeah,
and really not lose their $100,000.
And the money that you had access to was debt financing, right?
No, it was equity.
Okay.
So these guys, we got a combination of debt and equity. So we bought it for $3.2 million. I raised $1.6, but that was enough to do all the rehab, do all the things needed to be done for the whole property.
Okay.
Plus, they paid us an acquisition fee and some other things, right?
Okay.
All the closing cost.
Yep. Okay.
So all in, we're like at $3.6 million or something. I can't remember exactly what we were in for the deal, but 3.2-ish, right? So we get the deal, and then you want to talk about like kind of like maybe the structure of what happened?
For sure, yeah, absolutely.
Okay, so like year one, we buy this property. It's got problems, so we got to fix the problems. And the first thing to fix is like the management team, right? So we go through and interview them, and we know they're just not the right people. So we bring in our new trained staff from our management company. That's step one. And then step two is we hired Malden Police. We actually had 2 police officers that we gave free units to live on our property, so they would have a police presence. And then every night they would go walk the buildings. Right? And it really helped with all the loitering and all the things that was not good going on in the property.
Right.
Well, then we came up with a wonderful, like I don't know how this idea came in my brain, but I had said, hey, don't you guys have drug dogs? They're like, yeah, we got drug dogs. I go, could we use them at my property? You know, could we have them come, like, test the area? Sure. So we put a notice on all the neighbors' doors that we were going to bring the Malden police dogs, drug dogs.
Yeah.
And we had 2 move-outs in the middle of the night.
Coincidentally, right?
There was our drug problem, and they were now removed. Of course, once we did that, all the neighbors, they all know who it is, but they're not going to tell, right?
Right.
But they were coming up and letting us, say thank you.
Yeah.
And really, we just started that year one was just a whole transformation of getting rid of all the unwanted type of tenants that were not really wanting to be good or great tenants. And then a combination of we started doing a building at a time, fixing up.
Hey, let me ask you this, Corey. Before you started making those improvements and stuff, was the property already cash flow positive or no?
No. We made like our first NOI, like our second month of business, we did like a total, well, I can tell you, we collected $50,000 in rents, as opposed to the month that we sold it. Right, we collected $112,000.
Okay.
Right, so 5 years later, we collected $112 off the same building.
Sure.
But no, for the first maybe 6 months, it was negative.
Okay.
But after the 6 months, we got it to where it would be stabilized, right, at 85%. Because we bought it was like maybe 70% occupancy. We got it to 85 by the first year, and then by the second year. So year two, year one is really just taking it building by building, fixing it up, and fixed all the problems. By year two, now we're done with the interiors. Now we're working on exterior stuff. So we're doing all the trees, all the bushes, putting a slurry and stripe on the parking lot. We actually put new roofs on all the buildings.
Okay.
And so now we started very exterior looking really pretty.
Yeah.
We redid our laundry room. We made and one of the things that we did on the first year, and I always talk about this, but lighting. Lighting is like so key. It makes this like the biggest bang for the buck. We changed the incandescent lights to those really bright LED lights.
Yeah.
Like that makes a world of difference because like immediately we call it we function in workforce housing. Most of our tenants have jobs and they come home late at night.
Yeah.
And if you're a woman and you're coming home at night and you got these yellow, ugly, scary lights on, it's scary.
Yeah.
If you've got these bright LEDs that are like put off all this light, it's a lot better place. And like immediately, all our tenant base like is talking like, wow, this is new management, new company. Oh yeah, we're here to fix things.
Yeah, that's awesome.
And that's really the trend. And so we just went that. Year 2, we fixed the exterior. And then year 3 through 5, all we're really doing is like optimizing rent growth. We're raising the credit criteria to when we get the best tenants. We implemented what we call an ACH program. So now, to get on any of our properties, you have to, we have iPads at the property where you have to put in your information, and you have to have a checking account. Well, in workforce housing, to have a checking account is kind of a big deal.
Yeah.
Because there's a lot of people like to pay by money order.
Right.
And so for us, you got to have a checking account. And so that's one of our filters. But it also allows us to ACH the first of the month and collect about 95% of our rents.
That's awesome.
Well, so now I have my manager not sitting there being, with her head down.
Chasing checks
doing stuff like, now that her head's up, she's looking at the property. She's looking at the people that come on. She's managing our property correctly.
Right.
And so we optimize that.
Yeah.
And then when we get ready to sell, like we did on this property, we sell for premium. So we take a number that we think in our head is right, and then we add some more money on top of that. And the reason for that is we want to market to a certain type of either a Wall Street grade type of buyer, or honestly, someone that has a 1031 broken exchange. And that's exactly what we found.
You got to move fast and find a deal and not be so picky.
Yeah, and the reason is because, see, we have 5 years of, like, perfect books, perfect financials, and we have a rising income story. And that rising income story, don't undervalue that story.
Absolutely.
Because Wall Street will pay big money for consistency.
Yep.
Right? And that's what we know this, and so we market to those types of people. And we found someone just like that. They needed to close pretty quickly. They had a 1031 exchange, and they bought the property. So we bought it for $3.2 million, and we sold it for $8.8 million.
That's awesome, man.
And I netted like $4.8 million.
Digital fist bump. Boom! Yeah. Hey, what's incredible when you start to think about different buyers, and we think about this in the single family space, but in your space, it's even more so. There's a ton of people out there, like guys like you and me are value buyers, right? We want to buy something that we can add value and increase it and make money that way. There's a ton of people, especially the more professional investors, they just want to buy cash flow, right? Like they want something that's stable, reliable, and they don't want to have to try to improve it. They just want it to stay stable where it is, right?
Oh, absolutely.
Yeah.
Yeah, and they'll pay big money for it. They'll pay a premium for it because they're not looking for the big bump.
Right.
They just want, just a stable rising income stream.
Yep.
And that's, once you figure that out, once we understand that model, that's why we hold our deals for 5 years.
Right.
Is because really year 1 and year 2 is to fix all the broken stuff. And those last 3 years is really where we focus on that nice operation story.
Yeah, that's
that we
awesome.
can say without a doubt, hey, there's no deferred maintenance. There's nothing you got to do with this property. Just keep operating the way we are. And you should have a really good, successful, time and make the money.
And what some folks that are listening right now, if they don't know you, may not know, is you've done several more deals since then. And while you got a nice payday right now, you're not taking your money off the table. You're parlaying that into the next deal, right? Share more about that.
Yeah. So the reason we sold this deal was not just so we could go make a big gush of money, because that's not even important to me. So what is more sexy to me than making big money is making huge cash flow checks.
Yeah.
And so we are going to do a 1031 exchange and that deal. And we just locked up our new property that's in Indiana. It's a student housing project. We're buying for $12.7 million, but it will spit out around $560,000 a year of cash flow.
Wow.
Like, that's something to get excited about.
Yeah.
I still have the equity, right? I still have it's there.
Right.
But now my money's working very smart, very hard, and it will work for me for the rest of my life.
Yeah.
So one deal, Mike, I created legacy wealth. Now, I've done this with, I've been a fix and flipper and wholesaler since 2005. I've made a very good living doing it.
Right.
but I've never become wealthy until I did one apartment deal.
Yeah, that's awesome.
That's
I just had I had a live event this past week for three days, and I talked a lot about that. We make a lot of money wholesaling and rehabbing. We've done very well, but my wealth is in my rentals. Right. It's just like it's just, I think you need to look at it both ways. And even if you're doing multifamily and you're just starting off, as you know, if you were only doing multifamily and you just had one deal, it probably wasn't also throwing off enough cash flow for you to live on too. You've got to kind of have your income, and then you've got to have your wealth building side, right?
You have it both, yes. And I still have a wholesale business, so I totally subscribe to the method of you should, the great thing about wholesaling and even fix and flip is you can make some paychecks.
Yeah.
But don't lose sight of what Robert Kiyosaki used to talk about, which is cash flow, and pay attention to that game. Do your rentals, right?
Yep.
It could be single-family rentals, which is great, or you could step up to the multifamily game. So it's, either way, it doesn't really matter, but it's that cash flow that represents true wealth. Because the cup gets refilled each and every month.
Yep, absolutely. And truthfully, I think I could speak for the industry when I say this. For the most part, most of us get in this business to achieve financial freedom. And again, while wholesaling and rehabbing, all those things have been very good to me over the years. If the moment I stop doing those things, the money stops, right?
Yeah.
And so that's not how you define freedom. Now, it's enabled me to do a lot of other things, but what you want is the type of cash flow that you're talking about, to where you could just stop at some point, just stop working completely, and the cash flow will continue for as long as you let it, right?
It's becoming the big kahuna, Bruce Wayne, right?
Yeah.
It's really looking at, I'll never forget it. He gave me the perfect vision of what time and money really look like. And I think every investor truly inspires for the both, right?
Yep.
And we've been settling for one a lot. I feel like that's my mission now, is to get out there and educate people and let them know that, guys, fix and flip and wholesale has been great, but don't forget on passive income. You've got to start stocking up for that kind of stuff, because that's the generational wealth. It's the one that lets you quit and live a life of that no other can live.
Right. Hey, normally I wait till the end for people to kind of plug something, but share your book. I know your book's coming out here in just a few days. Pop that book up.
Yeah, okay, here it is, right there, boom.
So it's called Why the Rich Get Richer, and if you go to whytherichgetricher.net, Corey will give you a free copy. You got to pay for shipping, but tell us about that.
Yeah, so Why the Rich Get Richer, I wrote that book because I really just want to talk about all the ins and outs of, how I see investors, really monopolize on their monies, right? And I think people that are smart are looking for alternative ways to invest. And as investors ourselves, there's got to be a way, why I think apartments for me is a lot easier than doing single-family homes, okay? Now, it's only because maybe I've gotten really good at raising private money, but because I can buy 100 units at one deal.
Right. I'm
jealous. I don't have to go through one deal.
I'm jealous. I talk about this all the time. I've got a portfolio of rentals, but I'm like, I could do a deal with Corey and 4x my rental portfolio with one deal, or whatever.
Yeah, we're gonna do that, by the way. I promise
absolutely.
You. So, but it really does. So that's, to me, that's one deal. And so, in my mind, if I could do maybe 4 to 5 deals a year, my life is cherry.
Yeah.
And the best part about that is, because they're such larger units, I'm paying for management. I'm paying, I bring in a management company to do all the work. In fact, my management company finds all my deals for me now.
Yeah.
I don't even go find the deals.
Yeah.
They come to me. And so all I really do, the only job I really have is to cultivate and talk with my capital. And that's the fun job, because hey, let's go watch a game. Let's go watch a hockey game. Let's go out to dinner. Bring 2 of your friends.
Yep.
And so and let's just talk and have fun. And meanwhile, I just shut up. I pay for everything, and they do all the talking, and then I get 2 referrals.
Yeah, that's awesome.
So that's the money game, and it's a lot easier, and then it allows me to live what I call that big kahuna lifestyle, right?
Yeah.
I've become a cash flow creator.
Yep. That's awesome, man. So let's talk real fast about kind of the lessons learned. If people are listening to this and they're like, how do I do that? What do I need to do? I'm sure you would probably agree. People don't have to start in single family. So I know some people that do a lot of. I think even Dave Lindahl says that he didn't do any single family. He just like went right to multifamily, or I can't remember somebody else. But there's some people that think you step up. There's some people that just go right into multifamily. But if folks wanted to just kind of ease their way in, and sometimes people are overwhelmed by the whole raising money idea, which I know you can appreciate that. For some folks out there, but just talk about like people could start to get started. Besides, obviously, read your book.
Yeah. Well,
hey, bring me a copy next week. I'm going to see you in literally 8 days. So bring me a copy, my friend.
I will.
Not that I'm too cheap to go buy it. No, I want a autographed copy is what I want.
Yeah, I'll put all magic words in there for you. But so to answer that question is like, it starts with like the concept of the belief first, right? I think people got to believe it with their mind.
Yeah.
Hey, I could maybe possibly do this. And then really, the whole raising private money, I know it sounds very scary. It really does. But it's really a lot simpler than most people think about it, because here's the deal. You never ask, this is something that I teach, is you never ask people for their money. You only ask, who do they know?
Yeah.
So when I'm making a presentation to somebody about, hey, let me show you, I'm like, hey, listen, Mike, I think you're the kind of guy that you have lots of influence on people, and I honestly, that's what I want to use. So if I could have you like look at my stuff and I just really like, I want you to critically look at what I'm doing as I present it to you, and let me know if you make any changes, because I want to make sure that you'd feel comfortable referring your friends to me. Is that all right?
Yeah.
And so then we go through like a small presentation, and you talk about what I'm doing in multifamily. Like, here's what I'm going to do. I'm going to buy properties for this. I'm going to have this management company. And meanwhile, Mike is sitting there critically looking at my stuff, because I've just asked him to like be my buddy and look at it hard. And so you're really paying attention. And at the end, I believe this: the right people will always self-select. They'll say, you might be like, hey, Corey, well, aren't you going to ask me?
Right. I think I'm interested, yeah.
Yeah, well, I mean, since you put it that way.
Yeah.
But truly that's the secret to raising private money.
Yeah.
Okay? So that should, and how do I start? I started with asking my friends and family. Oh, gosh, people are like, oh, gosh, you asked your friends and family. I don't have any friends or family that have any money. That's what a lot of people are going to say, right?
Yeah.
Well, join the club, because neither did I. Right? But I still use my friends and family, because guess what? They were great people to practice on.
Yeah.
They really were.
And they know people, too. I don't know how yours ended up, but sometimes they're like, I happen to know this person. Sometimes people know people. Like, they might be broke, but they know somebody because of where they work or friend of a friend type thing.
That's exactly what happens.
This guy's just saying that he needed to
You
invest his money
start going up on the money platform. That's what always happens. So someone knows someone that's wealthier than they are, that's wealthier than they are, and everybody wants to look like they have the inside track.
Right.
Right? And so, and like when people come in, a lot of people that actually come into my deals usually start with giving me the minimum investment. Okay? Even though, and sometimes I'll even cut them down. Like they will, I'm thinking about putting in $400,000 or $500,000. I'll be like, listen, just give me $100,000, okay? Because you don't know me and I don't know you, and like I want you to understand because I'll have other deals coming down, and I want them to truly like get into the deal and start seeing how it works in our process, and then they become advocates. And so, really, it's a way of just communicating, and it's not salesy, because the one thing about money is when you need money, you never get money. Right? So you've got to act as if you do not need anybody's money, because we're not selling. And I believe this in my heart. Is when I'm selling a multifamily deal, I'm making an offering. Like, I've got a really good opportunity that I would love for you to take advantage of. But if you don't like it, I don't even care. Mm-hmm. Like, it's all good. Yeah. Right? Because I've got like 10 other people that want to talk to me today. Even if they didn't, that's what you'd still say, right? Because you got to make the illusion that you don't need anybody, and honestly, that becomes a reality.
Right.
In the beginning, you may be saying the words, but truthfully, once you get rolling, that's the reality. Is people are knocking down the fund because, Mike, no one trusts the stock market anymore.
Yeah.
Like,
Yep.
who believes in that anymore? Not very many people. They really want alternative ways to invest.
Yeah, well, something physical that they can not even if it's not even in their hometown, but at least they know if they wanted to jump on a plane or drive there, they could see it and feel it, and it's tangible.
Yes,
right?
Yeah, and that's exactly what we sell. Like, this is a real deal, right? And so we talk about risk. What's going to happen? Could everybody move out? Probably highly unlikely. But could people move out? Yeah. Do we care? Not really, because that's just what happens. People move in and out of apartment complexes. Now, if it started trending, we're going to pay attention.
Yep.
But generally, it's just a little bit of a cycle, right? And that's okay. And we don't freak out when there's 90% occupancy and 10% vacancy. No one cares.
Right.
Yep. Now, trust me, I still care.
Yeah,
you
care.
We want 95%, 97%.
Yeah, you care, but it's unlike single family. It's like if you have one unit and you have one person moves out, you have 100% vacancy. There's some
it's
some
0
comfort
to 100,
in an apartment
right?
community because everybody. There's this. I'm probably gonna screw this up. Somebody that I used to be kind of a mentor to me said everybody ain't gonna do anything. It was basically just saying not everybody's gonna do the same thing at the same time.
Yeah,
right?
Yeah, and really that's the only risk with single families. If you only have one or two, right? If one moves out, you're like, oh gosh, there's all the income is gone for that property.
Yeah.
And so now if you had 100 homes, it's a little different. Now you can pull off vacancy.
Right.
That's not a big deal.
Yeah.
But yeah, and so there is some comfort, and so finding money seems scary. But honestly, it is it's like anything else when you start something new. When you say, hey, I'm going to try to buy a home. Well, that was scary when you first started for most people until they started getting through the process. They understood it.
Yeah.
And so I always find the more you can educate people on how to do it, your mind starts to understand and starts to tell itself that, yes, I can.
Right.
And then the other part is finding deals. Now, finding deals, just like anything else, is a little bit harder these days, even for multifamily. But it's very easy to get deal flow. And it's different than single families, where in single families we do a lot of direct mail marketing. We try to find motivated sellers. Okay? In multifamilies, I basically market to brokers in the markets that I follow. So we're on every broker's list, and they send us their deals because most of the deals that we buy are 100 units plus, and they're sold by what I call sophisticated guys like me. I'm not going to put it on MLS, or I'm going to use a broker from a brokerage firm to sell my property.
Right.
And I have to leave enough money on the table for another investor to come buy it. That's why the multifamily, they understand that. If I can't make income, I can't buy it.
Right.
Now, what we get good at and how we find deals is by operations. And operations is really what makes or breaks you in this business. Yep. And how do you find good operations? Well, you got to make a lot of phone calls to management companies, and you ask them very detailed, because what you're buying in a management company is their systems. Right? How do they train their staff? How do they, from a lead to a prospect to a tenant? What's the process that they have? And what kind of marketing do they do? Do they do street level marketing? Do their managers get out of the desk and go knock on all the businesses right around the street? Where are those businesses around the street? And how come they're not living at your property?
Right.
And so those are the things that we do at our properties that ensure that portfolio wide, we probably have a 95% occupancy.
That's awesome.
So
That's
keep
awesome.
it very high because we believe in 100% occupancy.
Right.
And we actually obtain it quite more often than not. We can't. It's hard to hold it there, but we actually get there more often than not, 3 or 4 times a year.
Yeah, that's great, man. That's great. Yeah, and there's some people, right, that just in their mind they're like, well, if I can operate at 90%, I'll be happy, right? So they are always going to have more vacancy than they want because their mindset is, well, 90% is pretty good, right?
Yeah,
I know you're different in that regard. Like you're shooting for 100%.
Oh, absolutely, man. That is like, and
I know that sounds crazy what I just said, but am I right with you there? Like a lot of multifamily people, they just say, well, the average is like 85. I'll be happy if we hit 90. But nobody's saying like I'm gonna have 100% or I'm not happy.
Yeah, that is like that's the shift, right? So how do you get consistently to stay at 95? You got to put 100 as the benchmark.
Right.
Right.
And that last little bit there, that sounds like a little bit. I mean, there's a ton of profit in that, right? I mean, it's all profit.
It's all profit. Right. And so it's funny because like in our system, you're either red or green, right, for certain things. And I'm going to give you a little insight of how we operate because it's kind of a funny story. But like every property that we have they have a blow up mattress, a whole thing of bedding, sheets, pillows, right? And so you're either red or green in our system for certain KPIs, right? Key performance indicators. And if you're red for a certain amount of time, a managing mentor will show up at your property. Now, these guys are within our management system, and they just go travel to wherever we're operationally challenged, okay? And they sleep in the office, right? They get the bedding out, and that's where they're sleeping. It's crazy, dude.
Wow.
And they totally think and they'll stay there for a month or 2 months, Mike, however long it takes to fix the problem. And they're there to really fix the problem and help my manager, not to sit there and say, how come you're not doing this? They're like, here, I'm here to help. You use me, right? But the great thing about these guys is they're seasoned. They're the best of our management, right? That have been there, done that, seen everything. And so on this particular deal, they didn't make a site visit, but it kept on every month. There's only 2 vacants. Like it's 100 unit property, but there's always 2 vacants. And so it's like the guy's like, darn it, what is it going to take to get you out of your chair and get those two units filled? Like, why is it always 2 units?
Yeah.
Right. Why go fill them? Go get off your butt and go fill those 2 units.
Yeah.
And like that's the mentality. It's done out of love, and the guy hit it. The guy actually did it. Right. So management is like, you know what? He got out of his seat and it's like, I'm going to make it happen. He made a commitment to get the 2 filled up, and he got to 100%. And then when he gets to 100%, dude, it's like a big party, man. Like I'm calling him, my management company's calling him. We get a big bonus for it because that's what we want to reward that very heavily.
Yeah.
And say, you did it, brother.
That's awesome. That's awesome.
Yeah.
Well, Corey, we're running a little long on time here. Tell us one more time. I'm going to add a link down below for whytherichgetricher.net, where you can get a copy of Corey's book. If folks want to learn anything else about you, is there anywhere else for them to go, or is that the place they should go?
You can go there, but you can go to kahunawealthbuilders.com, kahunawealthbuilders.com. But in that book, the book thing that I'm giving away, the whytherichgetricher.net, I'm also giving away like my video series on how to find money, how to find deals. I've got like extra bonus videos and stuff that I've just added into there because I wanted to over deliver.
Oh, sweet.
And so I made it really sweet. It's a really cool little, I'm giving you a bunch of stuff, man.
Yeah.
And I just want to it's my first book, dude.
Yeah.
Like it's my first one.
Yeah.
I'm real excited about it, proud of it.
You should be. That's awesome.
And, I just want to give back because, this real estate business has been so good to me.
Yep.
So good to me. And I just want to share.
Yep. Awesome, man. Hey, great to see you. I always appreciate your time.
Mike, appreciate it. I'll see you next week, brother.
Yep, absolutely. Everybody, this was episode number 376 with Corey Peterson. I'm going to add some links down below in the show notes here. If you're listening on iTunes or somewhere else, make sure you go over to the site and look under the shows for this most recent show, 376, and you'll get access to these links. So really appreciate you. Man, I love talking to people like Corey. He inspires me to just keep going, even if I'm not doing exactly what he's doing, which I kind of want to be doing exactly what he's doing, but it inspires me. So hopefully you got something out of today's show. I'm starting to get a little more consistent in asking this, but if you love this show, if you like what we've been doing, 376 episodes deep into this show, please go out to iTunes, Stitcher Radio, Google Play, wherever you watch this podcast at, and give us a positive rating if you love the show. We'd appreciate it. It's the fuel that keeps us going. So we'll see you guys on another upcoming episode. Hope you have a great day. Take care now. Bye-bye. Thanks for joining us for this episode of the FlipNerd.com Investing Show. If you're not yet an elite member of FlipNerd, you're missing out. We have tons of great training, including a new detailed master class published each month, and live training webinars with experts twice a month. Plus, you'll get access to all of our archives, where we already have a growing library of master classes and other training videos. Elite members also get membership in our incredible online Mastermind group, where many of the top real estate investors from across the country, including many of the hundreds of guests I've had on the show in the past, are already members. Whether you're brand new, looking to get started, or a veteran, you simply must join today. I promise you won't be disappointed. To learn more or join today, please visit flipnerd.com/lab. That's flipnerd.com/lab. See you on the next show.